So most financial conversations define risk in a very narrow way. Usually, risk is described as volatility, maybe downside, or the possibility of losing money, right? That is correct. It's not wrong by any stretch of the imagination, it's correct, but it also isn't what I hear most often when people talk about risk applied to their own lives. What I hear is usually something a little bit deeper. I hear people trying to make sure that they don't lose control. Okay, this one's a big one here. That people don't want to lose control. They value control over not having it. Okay, I hear people trying to preserve flexibility. This is another one, and kind of like a common theme that you hear a lot is this whole control idea and the flexibility that control allows for someone to have. I hear people trying to avoid putting themselves in a position where they have fewer options tomorrow than they do today. They want more options than they do today in the future, right? And if I had to summarize it in a single sentence, it would be this. In my experience, wealthy clients often do not define risk primarily as losing money, okay? They don't define it primarily as that. That's a part of the equation, but that's not primarily how they're thinking of it. They're defining risk as losing freedom. Okay, so people talk about having freedom, having financial freedom, all of that sort of thing. A lot of these wealthy clients that I'm speaking with already have experienced financial freedom, and what they're trying to do is make sure that they're not losing the financial freedom that they've already been able to create within their own lives. And so anyways, what I mean by this is relatively simple. Many of the people I work with have already achieved a level of financial success that allows them to think differently. And so instead of asking, how can I maximize every potential dollar, they are often asking questions like these, okay? They're asking, will I still have access to my money? What happens if an opportunity comes along? How flexible is this? What does this decision prevent me from doing later, right? That is a very different conversation. And frankly, I think it's a much more mature way to think about it as well. Much more mature way to think about risk. Many successful people are not trying to optimize every dollar in theory, okay? They're trying to build a financial structure that still works in real life. They want growth, of course, yes, they do, but they also want access and flexibility and options and the ability to act when opportunities arise. And I think that part right there is extremely important here. Another pattern I've noticed is that wealthy clients are often less concerned about whether they can do something and more concerned about whether they want to do something. So let's go back and show you this one. They're less concerned about whether they can do something, and they're way more concerned about whether they want to. Okay, can do versus want to are completely two different things. Okay, and just because they can doesn't mean that they should, because they're making very intentional, purposeful decisions about how it's going to impact their lives on a day-to-day basis, not just the bottom line. Okay, now I've had conversations with people who had the financial capacity to pursue one particular strategy, right? The math worked out, the cash flow worked out, everything checked out on paper. So mathematically, it just was perfect. But then a different question kind of emerges from that. Would this still feel wise if, for example, business slowed down next year? Okay? Would this still feel wise if my priorities change? Would this still feel wise if I wanted more margin in my life instead of less? I've learned that capacity and comfort are not the same thing. Even a technically sound strategy can feel risky if it creates ongoing and unnecessary pressure or reduces flexibility.